Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny. And boy, oh boy, did we call this goddamn week wrong as far as big tech earnings. We're going to talk about how it's compared to what was expected and why. I don't know. Maybe we were wrong, and actually the market is ready for a breakout.
Two Super Guys Trade Stocks.
Saying we've been bearish over the last year and a half at least is a very, very fair statement, okay? And yeah, we've always tried to listen to both sides of the argument, okay? So I know I'm trying not to be super biased, but that's the way I traded for the short term, because we were looking at that particular indicator as far as front month versus back month kind of volatility, and how that when I hit the 1.2 level, we saw market sell-offs or market tops through this entire bear market trend. But this past week, we did end up positive for the S&P 500. It whipped around a little bit. It was a little more volatile within the channel, I guess, than prior, but interesting. So, where are we as far as the earnings season? Right, earnings season can really move the market.
You put Fubo in there?
I know, for you in particular, actually.
I'm not even in it.
Before the bell.
I've been out of it forever.
Oh, I thought you still held the shares just to remind yourself not to do anything stupid.
No, I used it for tax harvesting. So then
right.
Yeah.
Right. So where we are right now, we're more than halfway through this earnings season, right? The 162 companies will report this week, right? You love it. So this is kind of like the rest of the major kind of bulk of the earnings for the season. A couple notable ones. Apple is the big one, right? This week, they're Thursday after the close. AMD is a little earlier in the week, I think Tuesday after the close, and Warner Brothers was one I owned previously, and Fubo for Dylan were both Friday before market open. There's a calendar at the end if you guys care about that stuff. But so this is an article from FactSet. This is from them. Basically, this is showing so far this earnings season where all these different S&P 500 sectors have come in as far as their expected earnings compared to expectations. And if you look, there's a whole lot of green here, right? Makes sense?
Yeah, the above is very high percentages there on the bottom.
Yeah. So across these 11 sectors, still a lot of times the companies are coming in above the earnings expectation. Not just revenue, but earnings. We'll talk about a little bit separately about revenue versus earnings. But very few, small portion of companies are coming in below their expectations, right? So the market had expected, a little bit less. They had kind of moved the whole trend down, and now companies are outperforming what they were being expected to do. So this right here in particular is why I thought this week was so fascinating. So this is looking at earnings as that had been reported the week before, closing March 31st, versus, not March 31st, but the kind of first week of earnings versus the most recent week we just finished, right?
Okay.
And if you look at it here, the initial companies reporting earnings were down 6.7% year over year in terms of the earnings.
Okay.
Whereas now we get this another kind of group of earnings reported in this past week with the major tech companies in particular, and it was only down 3.7% year over year. So significantly closer to where we were performing last year than we were in the early kind of subset of earnings reporting companies.
Okay. All right.
Yeah.
Interesting.
And particularly if you look at all across the 11 sectors here, this also gives you kind of an idea of which companies are most outperforming, the prior year.
Okay. I will. It is interesting because are they beating expectations because they're truly doing that well? Which, full disclosure, we'll do the chart after this. It looks like it's about to break out. So I'm not trying to say we're super bearish still, but people could have thought that the results were going to be a lot worse. So then the expectations were kind of mitigated a little bit.
Yeah. I mean, it is down, right? You're still talking about 3.7% down year over year, right? Yeah, that's as of this 53% reporting threshold that we're basically at right now. But yeah, the market had expected the companies to be performing a little bit worse. So here's some other facts and figures kind of related to where we are in terms of typical average, right? So right now they're saying 74% of companies reporting so far have beat on revenue above average. All right. Typically, the 5-year average for the number of percent of companies being above expectations, 69%. Nice, right? And then the 10-year average is 63%.
I didn't realize what you said. Nice, Dylan.
Yeah, exactly. So better than kind of to be expected, right? Like the kind of analysts a little bit had moved the bar so low that more companies than average are getting over the bar.
Yeah, they
And
all
then
became Micron. They took a play out of Micron's book. Do it
yeah,
every
yeah,
single quarter.
exactly. And then that's just on revenue, right? Because in an inflationary environment, yeah, I get that like things are they're able to charge more and pass on prices to consumers. So revenue beat was probably more in line with expectations, but they're actually still delivering on the bottom line too. So the earnings are still doing pretty well. You look at the PDE ratio here for the S&P 500 as a whole, you're looking at about an 18.1 for this most recent quarter. You know, not unreasonable. The 5-year average is 18.5, 10-year average 17.3. So we're above the 10-year average, but we're below the 5-year average, which has included a pretty massive run up. So not horrible.
Not horrible. Not horrible at all.
Yeah, and then as far as like how broad based this whole thing is too. So this kind of gives you a little bit of an indicator here. When revenue growth, 8 out of 11 sectors are actually doing pretty well as far as revenue growth year over year. Only 3% are reporting a decline in revenue. Right?
Yeah, so that's also, we're just really good at spending money, even if we don't
Yes.
have it. Like that's
Yeah.
that's
I mean,
part of it. It's
yeah,
the,
with leveraging debt and that the actual value of the dollar has become less, so it makes sense that they'd be eating on the top line. It's a little bit more murky when you talk about bottom line here. Not as many companies or sectors across the board are doing as well in delivering those kind of dollars coming in the door to actual earnings at the end of the day. That's about mixed, like 5 sectors and 6 sectors as far as which ones we're seeing earnings decline versus growth. The one thing I thought was kind of interesting back to a previous point here, the revenue growth, look at financials. They're like the top one as far as revenue growth because of the inflation or interest rate environment we're in.
well, some banks aren't getting that much revenue growth.
Yeah.
Whereas-
And if you really want the really busy slide of like everything that's out there for this week, well, not everything, but a lot of them, right? Remember 160 companies out of the S&P 500 are reporting this week. A lot of names here. They're not the real headline companies as so much as with the exception of like Apple and AMD. Those are probably some of the bigger ones that people
and
pay attention to.
Coinbase,
CVS,
I think
yeah,
Coinbase could be interesting.
yeah. I have mixed emotions on Coinbase and have for a long time. Qualcomm is another one that's kind of a little more essential to the actual kind of semiconductor industry there, if you will. So yeah, it should be a good week. We'll be interested to see kind of what sort of kind of news we get this whole week. But we want to look at the chart here and we'll see where we are.
So we've been updating this kind of every week. So this is the SPY weekly chart. Just quick recap: this 200 moving average is the light blue, and this gray one is the 100 for weekly, not daily. It looks different for the daily. But you can see. Let me move my face real quick so you can see the volume. All right. It looks like we're about to break out to the top side, right? We've been in this channel trapped between these two moving averages. I previously did a video showing what happens when we're between these, how we're kind of in a chop zone. We never really pick a direction, but once we break out, we're usually there for a long time, minus 2 or 3 times in the last like 15 years. So it looks like we're really, really close. The Qs look even closer to a breakout, right? You have some indecision days with lower volume. Each bullish day has more volume. It really looks like we're about to hit, right? And in terms of we've been bearish forever, this very well could have been market bottom. It's possible.
Interesting. All right.
Yeah. 348 up from, what is that? 478.
Anyone that's convinced by like their knowledge of the market, I think, is just absolutely insane because it's a very humbling experience trying to interpret it. The real question, I think, where you kind of put your chips down is Dylan. Do you still hold those puts? Like, what are you thinking?
Yes. I'm waiting
You're
for
still
Apple
holding them.
earnings.
Okay, fair enough. I mean, what 7% of the SPY is Apple earnings alone, so like I get
Yes.
that. All right.
Now, with that being said, Microsoft is 6, and they went up 12%, I think, 12-ish%. So,
Yeah.
also, it's to the point where I can't lose anymore, right? Like they're already like, so like if I hold, I lose an extra $500. So whatever, who cares?
Understood.
But not looking good in the short zone. I will say, I just thought of this. I might take a look at Moderna because they're reporting earnings on Thursday, and I don't think they get the vast majority of their money from the COVID vaccine, and I don't think the COVID vaccine is doing that well. So
I mean, I think that's probably an understatement at this point.
yeah, I just thought of that. I'll take a look. All right, guys.
All right. Cool. Catch you on the next one.